All right, good morning, everyone. In the office nice and early today. No issues with dentist appointments or sick kids or anything to keep me from getting into the office at a decent time to get my pre-market work done. All right, so coming off of a little bit of a down day yesterday, today's a new day. I get to forget about it and move on. And I don't know what it was with yesterday. Maybe I didn't get enough sleep, didn't have enough time to prepare, whatever. I didn't have confidence in my process, and just really didn't have a very good day trading. So here we go. The first thing we've got on watch here is the stock symbol G, as in golf. I have three levels on this one at $47.88, $47.38, and $46.93. I'll probably stagger shares between all three of these numbers for morning profit taking dip. So it isn't always true, but often enough for it to be profitable, people will see their stock has popped up from $45.14 to $49, and they'll take some profits. They'll be like, okay, I'm going to take 10% or whatever. So, the strategy is to count on some early selling, for some early profit taking, and then for some buyers to come in and say, okay, well, this is a deal. This company is going to continue to grow. The news on this one, it's going to join the S&P Mid Cap 400. Which is a good thing. I've seen this a few times since I've been trading, and when a company joins a new sort of investment group, there are a boatload of S&P 400 mid-cap funds that will start now buying this stock because it's a part of their investment strategy. So, quite bullish on the stock. All right, BYD, Boyd Gaming. Now this is an interesting one. We'll see what happens here. If you take a look at the daily here, this is the daily chart. Now this is a linear chart. This isn't algorithmic. Let's put it on a log here. Yeah, not much difference in the log chart as compared to just kind of the regular chart there. This thing has had one heck of a run. I mean, down here at the end of February, this thing was selling at $10 and $6 per share, and here it is up here. If it opened right now, it'd be in the low 70s. So I've got a couple levels on it. Definitely very bullish. It's in new all-time highs, so there's price exploration to happen up here. I've never traded this stock before, so we'll see. I have two levels on it, $71.47 and $71.01, right here. All right, next up, APH. Now this is one. I had two levels. I had two Fibonacci retracements on this one this morning. One, so after I did the retracement, you can see here, this is the first retracement that I did. This was its pre-market action, and then it dropped down here. So I'm scrapping these levels right here, and I went for instead levels that stretch back from its last low to its recent high, and that's where I get my levels for $65.40 and $64.40. Those are the entries that I have on BYD, 65.40 and 64.40. Now the headlines are good. The headlines are, let's see, no, that's for APH. Oh yeah, no, okay. Why am I thinking BYD? Oh, BYD is this. So sorry. BYD has great headlines here. Um, Boyd Gaming reports first quarter 2021 results. It really beat estimates. So BYD, we'll see what happens. It isn't always true that the stock performs really well after a company trounces earnings, but you never know. All right. APH. So my levels are $65.40 and $64.40 on APH. And that's the pre-market action that I'm going on there. Dipping down pre-market. Pre-market right now, APH is down 2%. Typically when that happens, when a company after earnings, beat earnings and so on, there's something inside of the earnings report. And I haven't gone through the earnings report to look and see. There's something like, it took on, there are all sorts of crazy things that can happen. And in fact, if a company pays down debt, that actually reduces its balance sheet on both the liabilities and asset side. And so traders don't like that. If something's like deleveraging, then, traders will be like, well, I mean, there's no risk here. So anyway, who knows? I'll have an eye on it. Not as confident as in APH as I am in G or BYD. All right, AMD. AMD is a really volatile stock. I know a lot of people who trade AMD. I know a few people who trade AMD 2 or 3 times a week. This thing puts in a lot of moves. There are a lot of traders who like it. I guess I'm partial to some stocks, but anyway. I have a level of $88.10, $87.62, and then $87.19 as entries. And I am confident. I'll put AMD here in front of APH. Actually, I'll rearrange my tabs there. So my first top 3 are in the leaders here. Let's see, what did I do? I've got a window over here that I just did something on. There we go. Okay. So I like AMD. APH, went over that one already. SSL. Okay. SSL is not, I don't have a high degree of confidence in SSL. And in fact, all I did with this one was I didn't even put price levels on this one. Just leaving the Fibonacci up. I don't have a price target or anything. If I'm just going to keep an eye on it. If it starts hitting the scanner, or it's got a huge float, so it's not like it's going to be. It's a 626 million share float, so it's not like it's going to act with any semblance of momentum. But it's up there. I've got it on watch. And then the only small cap that I have is ADMA. The news on this one is pretty good. I had to do a little bit of research to find out what this was all about. Biologics receives FDA approval for increased IVIG production scale. Now, IVIG is like intravenous drug introduction. Like you can suspend different drugs inside of this IV drip thing and deliver the whatever therapy it assists in with this fluid. So good news for this company. It seems strange that the stock would be so low. It's got shares outstanding of 104 million. Let's see, IVIG. I don't see its float. So it's a small cap, but the float is so large that I doubt it'll really trade with momentum. Actually, this one would be a good one to put levels on, to put a Fibonacci on, since it's probably going to grind. We'll see. So it looks like the 50% mark for this run up is at $2.16. If it were to open right now, then the 50% mark would be at $2.07. And as strange as it may seem, $2 is a psychological point for traders of small caps. When you're trading something that's down here in the dregs, $2 is a mile marker. So it's possible I could enter this at $2 between somewhere around 203 and 207. Perhaps there will be people who will want to defend the $2 mark. I don't know. We'll see. There will be traders who are interested in buying at that price. The larger scene here, this is the SPY. The SPY opened up right now. It would be up 0.02%. It's probably, today's a Fed day, so it's probably going to be pretty quiet on the major indices until the Fed decides to make whatever announcement it wants to make. That happens at 2:30. And so I'll pull this up. And so usually on Fed days, it's kind of like this. And then, pardon me, when it hits 2:30, it's like until it makes up its mind which way to go. So then it's actually kind of like, let's see, here's 12:30, here's 2:30, and then all of a sudden it'll go and then pick a direction whichever way it wants to go. All right. I usually don't get too involved with Fed days. It depends. Sometimes there's such a drop on like the slightest thing said that it's worth buying the dip. I don't see. Oh, and here's the VIX. And so I keep erasing this 19.2 level right here. So the VIX is working on staying below the gap here. Go over this one more time if you've been following the channel. I've been over this quite a few times. This gap right here is from late February of 2020 when the market started to crash from the cerveza sickness closures around the world, including the United States. So you can see here, it gapped up right here, and then it came down close to the gap here, then came into the gap right here, and then moved away, swooped down, moved up, swooped down, went into the gap here for a little bit, then popped up a couple times, then came down to the gap again, inside of the gap again, then popped up. Now it came back down into the gap again, and then kind of popped up, and now here we go. It finally came down and tested the bottom of the gap right here, or it fell below the bottom of the gap right here, came back up, tested the bottom of the gap, and is now moving away. I imagine there's probably going to be another retest of the bottom of the gap, or just inside of the gap inside this range right here at some point, and then it'll finally decide to start falling away, and it'll be very bullish on the S&P when that happens. We're coming to the end of Quad 2, which is on a Cartesian coordinate plane. If you put, I think it's GDP on the x-axis and inflation on the y-axis, and then number the quads from top left 1, and then top right would be 2, bottom right would be 3, quad 3, and bottom left would be quad 4. Right now we're in quad 2, which is the rate of change on inflation and GDP is rising. We're at the tail end of that. That's supposed to end somewhere around June or so, and then we're going to dip down into a mild quad 4. So I expect the market to be bullish for the next couple of months or so. We'll see how high this stock market can go, and then there'll be a summer doldrum. That's the way it goes. And on top of that, I think everybody knows that this is a bubble. I mean, if it weren't for easy federal monetary policy, as well as um, basically, government welfare. I mean, the government has handed out checks, for a family of four to I don't know the numbers exactly, but many thousands of dollars on 2 or 3 occasions have been just doled out by the government, U.S. government, on with the CARES Act and so on assistance. I think it's an okay thing. Generally speaking, if it weren't for the coronavirus, I think it'd be a terrible thing. Because it's really not capitalist, it's very socialist. However, given that essentially was an emergency with this cerveza sickness, I can't call it by its name, or my YouTube channel will get bumped, or I don't know. It's really weird. I don't know the rules behind YouTube's policies of what you can and can't say, and I don't feel like trying to figure it out. But anyway, lots of easy money, lots of easy monetary policy. It's a bubble. Everybody knows it's a bubble, because once the quantitative easing stops and once the helicopter money stops, the economy better be ripping and roaring. Otherwise, all of this stimulus that's feeding the market, really it is going to go away, and the market will be starved if the economy at that time isn't, firing on all 8 cylinders with a turbocharger. All right. So that is the morning strategy session, everyone. Good luck out there today. Keep your wrist tight. Click like, share, subscribe, leave a comment, and I will see you at the recap. I am out.